How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on gold versus the US dollar. As you can see, our speculation of a stronger dollar and a weaker gold was correct. Going into this week, got a quick sell-off. You can see prices quickly repricing down to the IPTA 20-day low here. So if you count back 20 bars, that is the lowest low we have from the start of the month here. So you go back 20 bars like this, 20 days on the daily chart. That's the lowest low we have. Prices quickly repricing down to sell side liquidity pool. And we mentioned this before in many videos. Every 20 days, the market's either going to find buy side, find sell side, or consolidate. We can see already it's distributing very fast. Now, maybe because of the new U.S. president and the election recently, and what might come forward with tariffs and taxes and etc. Right, those fundamentals. But technically speaking, gold is overbought. Gold is above the yearly opening price. We have one more month of the year, and I don't think gold is going to close higher for the year. I think it's going to close lower potentially. We might have the high of the year in October, and we sell off and have some type of retracement back down into all that buy side we had for the year. Now, if we're seeing gold go lower, that means dollars going up, UJ's going up. We're also seeing GU, AU, EU, NU, all those majors too, selling off and distributing. We said last week that we want to wait for a lower swing high or wait for up close day. We can see there was an up close day here, and it was a great buying opportunity and a great selling opportunity on the flip side too. So we found a buying opportunity during the Asian session on Thursday night, and then last Friday, we were able to find a selling opportunity using the Asian session low and the standard deviations of that as well. So we'll show that here on the chart. So you take a look here on Friday. For those that are in the chat, you guys saw this screenshot and me posting it and telling you why I wanted to go short. I was going short on weakness. I was projecting the range of the Asian session high to low, and I looked for 2 standard deviations below, and I want to see price fill that. It didn't fill that during Friday, but going into Sunday and going into Monday today, price sold off quickly, and it filled all standard deviations absolutely, right? I took the standard deviation mainly because it was lining up with the New York low. I was just looking for something that was close in proximity to something that was objective. It's also close to the London session high. So those matched up, and even this Asian session high. So it matched up really nice. The Asian session high, the London high, and the New York low was all around 2 standard deviations below. So I took that short, selling on weakness. The stop loss was above the Asian session high. So I wasn't suspecting price to reverse and take out the Asian session high. I wanted to leave the Asian session high intact, right? Leave all the buy stop orders above it and leave it alone and sell off and continue to trigger sell stops and keep running. And in traders that are optimistic, right, there's a buyer's remorse. Every time there's a small retracement, they try to buy it, but what happens? It continues to fade. That's inevitable, right? There's a buyer, there's a winner, there's a buyer, there's a seller. It is what it is. Now, going forward now, hopefully you guys can still see my screen. Going forward now, I would like to see if we can get some type of up close candle, right, or some type of retracement back up into this bearish order block theory, and then it's selling off again into this 20-day low, or immediately Tuesday can open and run down. That could happen as well. But I would like to be on the side where there's some type of retracement, especially after a large move down, and then going to go short. And then we see if price is going to continue to trend lower. We have this old 60-day high here that price can also come back down into. Let's take a look at GU. So if gold is selling off, GU is most likely doing the same thing or respecting premium PD arrays. And as you can see, it has. Last episode, we expected some type of retracement into this last up close candle here after rating this buy side liquidity pool. Because my speculation was a lower gold, I was going to probably more than likely look at this raid, not for bullish momentum, but for a false break. And I wanted dollar to continue going higher. So there's a false break. It wasn't bullish momentum because we don't get a higher swing low. Right after breaking the swing high, you can see there's a quick repricing back down to a swing low. So it resets it again. So it breaks a swing low. That's bearish momentum. If you see a lower swing high form, most likely want to continue to go short into that. Price also rated the 20-day low here and is looking to return back into it again here. You got a volume imbalance or opening gap. Want to see price maybe respect this opening gap, trade into it a little bit, and then sell short. Maybe we run into that 60-day low. And then even outside of the IPTA look back data range pool, we have this low here back in August that price could run to. And it definitely looks reasonable. So it looks like they're still accumulating orders, and now they're getting ready to dump those orders. And the buyers are slowly fading out. The sellers are picking up. And we're going to see that probably play out there. Take a look at DXY real quick. We've been bullish since October, and it's still going up, 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 up. So now we're definitely seeing gold sell off. You can see, look at the respect. We had a down close candle. Immediately after a down close candle, 2 up days. Even today's Veterans Day. It's a holiday, U.S. holiday, bank holiday. Market's still very volatile. So markets are moving. I do think the DXY will close higher for the year as well. It dropped below the yearly open. Look at that. This is the yearly opening price right here. This blue line, I'll make it black for you guys so you can see it. This black line was a yearly opening price. So it went down below the yearly opening price on a discount and then pushed right back up. So they were buying dollar cheaper for the year for 2024. That was the best buy to buy dollar at. And look at that rally. Now, if we're seeing dollar go up, we might see stocks come down a little bit, possibly. But hey, man, this year has been a roller coaster. A lot of things have been taking place. So be cautious on what you're speculating on. Risk properly, risk well. Just to recap, let's bring it back home again. Let's look at gold. So I want to see gold retrace, give some type of pullback, and then look for a short. Any up day, I want to try and go short the following day. And that's what I'm looking at now because clearly the trend is bearish. We got a lower swing high if I'm correct. Unless these are double tops here. We check the high. Who's higher? Yeah, higher. So it failed to break this high. So Friday failed to break Thursday's high. Failed. And we went short on Friday. That's what you're seeing in here. It failed to break Thursday. See that up here? That's Thursday high. It failed to break that and it continued to go short. So I'm looking for some type of retracement and then look to see if price is going to fade lower. Hopefully you found this insightful. Peace.